Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, Wall Street's upbeat earnings expectations sets high bar for US companies. As well as that, left-wing surge thwarts far-right in French election, polls do suggest. And finally, Joe Biden campaigns in battleground state as Democrats debate his future. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Wall Street and US companies. Now, US companies will now need to deliver the largest increase in profits in more than 2 years in an effort to now avoid disappointing the very optimistic analysts on Wall Street. This comes as a new challenge for further stock market gains following recent record highs. Now, of course, those record highs we've been covering on the chart section, so make sure you wait around to when we contextualize what we're talking about here when we come to that near the end, so make sure you stay around so you see that. But ultimately, yes, we've been covering this a great deal on the charts over the past few months, as we've really seen, these companies, these US indices start to rally that represent the US stock market. There has been kind of some differences though in the rallies that we have seen between the different stock indexes, between the different industries that they represent. Of course, the Dow Jones, representing more industrial heavy type companies, of course hasn't really seen that same rally that we've maybe seen with the S&P 500, with the S&P 500 really rocketing to new all-time highs just simply because of the kind of efforts, or at least the kind of gains made by a handful of stocks, with one of those stocks in particular, of course, being Nvidia, with their kind of crazy performance recently as a result of the kind of AI hype, the AI boom, the AI revolution. That has really pushed Nvidia to these, these levels that we've never really seen companies reach before. And as a result, of course, Nvidia, for a period of time, I'm not sure if they still are, but for a period of time at least, Nvidia did, of course, breach that all-time high, company valuation level where they were marked as the most valuable publicly listed company in the world. So that's kind of what's been driving the S&P 500 to those all-time highs, of course. But we can't also discount some other companies which are of course making up the S&P 500, which have also had a very positive performance, and as a result have really pushed those US indices to the upside. But ultimately, it is the kind of S&P 500 that we are mainly talking about here when we're talking about the kind of uptick, the kind of the earnings expectations, and the upbeat earnings expectations. And ultimately that's because of the kind of all-time levels that we are seeing these US indices reach. Ultimately though, it will be interesting to kind of see how Wall Street's observations, their predictions, how that does compare between industries. And of course, this is an important article to kind of help us understand what those kind of big players, those big banks are thinking when they're looking at the stock market. Often, we can kind of get too involved in our own analysis, just focusing on what we're seeing play out, what we might value something at, and then we forget maybe what those kind of bigger players are thinking about, as ultimately those bigger players, they really do drive the market, and therefore it's very, very relevant to understand what they're thinking, as that's kind of what may play out, just simply because that's what they expect to play out, and that's therefore they'll make those moves which kind of pushes the market one way. What we're saying here is that Wall Street is expecting some, very high earnings releases. So, some very upbeat earnings expectations, as the FT does state. And of course, therefore, these companies will kind of have to, we'll have to achieve that essentially, or we're going to kind of see the market respond in a very significant manner. And that's why this kind of article, this topic, is so important to understand, is because in this situation, Wall Street's expecting some very, very positive earnings reports for this quarter. And ultimately, should we then not see that, then you kind of, the fallout that we then see within the US stock market is far more, understandable, or at least we can kind of expect that, rather than maybe, a quarter ago when they weren't expecting such high earnings, and then the kind of earnings met that, and then as a result, we didn't see as much of a fallout. That's just an example for you to kind of better understand why we might focus on this topic so specifically. But ultimately, definitely keep your eyes on this topic in general. And of course, as I said at the start, we're coming to the charts near the end, so that's when we'll kind of maybe take a look at the US 30, the Dow Jones, of course, and also the S&P 500. So wait around till you see that. With the S&P 500 stocks this month now being expected to report a year-on-year earnings growth of almost 9%, in the 3 months to June. This would mark the biggest quarterly increase since the early 2022, according to the FT sources. The tech-driven S&P 500 climbed nearly 16% over the course of 2024, thanks to just a small number of tech giants, including the likes of Nvidia, of course, as we covered. As a result, stock valuations have now been pushed to their highest levels in what is nearly 3 years. As a result, there isn't much room to the downside for these earnings reports. Key banks like JP Morgan, Citi, and others start the earnings season this Friday, which is then followed by Microsoft, Google, and Tesla, which are scheduled, in for July 23. Now, analysts cut their forecasts for corporate earnings as result season approaches. However, this quarter that hasn't happened to the same extent, with these numbers only having been trimmed by just 0.5%, which is compared to an average of 3.4% over the past 5 years. The S&P 500 now sits at all-time highs and has also seen its valuation be pushed higher from 19 times expected earnings in January to now over 21 times. So very significant expectations there, and of course we'll have that will help us understand why we see certain things play out in the market during this earnings season. So earnings season, definitely keep your eyes on key stocks and definitely look out for those earnings reports. Next article to talk about though is returning back to politics, which of course has been a very important topic recently with all the elections. And of course, whilst last week we had the British election where of course the expected Labour landslide took place, and now this week we're talking about the French election. Well, we're returning to the French election, and of course, previously when we've spoken about the French election, we've been talking about the RN taking, we've expected an RN majority, or at least a very strong showing from the RN. But we've also kind of noted that this alliance has been forming between the more left-wing coalition and then also the kind of centrist alliance, and therefore we're kind of seeing this kind of anti-far right pact form within the French Parliament, and then therefore preventing Marine Le Pen's party and herself to kind of take power within the French Parliament. And that's kind of what we're now seeing play out, and this is what this article does somewhat note. With the newly formed French anti-far right alliance now on track to halting the shocking rise of Marine Le Pen's Rassemblement National, which won in the first round. This comes following Macron's snap parliamentary election call, which has ultimately left the political authority in France and therefore the economic direction in freefall. And that's kind of been the real reason why we've been talking about this topic, of course, is because many economists and even just investors are warned of the kind of election which is taking place with regards to the economy and markets, as ultimately the RM in particular have promised a high spending kind of economic policy without kind of talking about how they're going to finance that properly, and therefore many investors have already started to worry, and basically we've seen the market start to decline in France because ultimately RN was expected to get into power and therefore start pushing for these kind of policies which would implement certain spending policies without the actual ability to finance that. And of course, as a result, you then see the fallout in the bond markets, as this is often the way, the sovereign bond markets, this is often the way that these governments try and finance policies which they can't finance through taxation. They borrow, and they borrow through the bond market, and that's kind of the key thing which those economists and traders were worried of. And therefore this topic in general is very important to understand, because if we're no longer seeing the RN on track to victory, then we might see then the kind of return in the markets back to the kind of levels that we were seeing pre the call of this snap election. That said, of course, that the Leftwing alliance, of course, the NFP, is also kind of promising these kind of similar economic policies regarding, spending without the actual ability to maybe tax as much as they will need to spend this much. That said, of course, they do have that more kind of expansive taxing policy, so arguably you could finance it that way, but still there's that economic fallout of maybe higher wealth individuals wanting to then move out the nation, and that kind of economic fallout as well. So this is very, very important to understand, and it's very interesting to now see how maybe the markets react to this news, with projections now suggesting the hard left alliance of NFP could become the largest parliamentary force after capturing between 170 to 215 seats. Even President Emmanuel Macron, centrist party, is running close behind after being predicted to achieve between 140 to 180 seats. Ultimately, no party or alliance is expected to achieve an outright parliamentary majority, and therefore many are looking to see what coalitions could be formed to govern, with the most likely outcome being an alliance between the left and the centrists. So that is the kind of expectation at the moment, but definitely keep your eyes on this topic as interesting things do play out. Last article to talk about, though, is of course to do with Biden, which we spoke about extensively last week, of course, after the kind of fallout from his Trump versus Biden debate. Now, Joe Biden is now campaigning in the key critical battleground state of Pennsylvania in a new effort to persuade voters that he is in fact fit for office. This of course comes following his significant defeat in a debate between him and Donald Trump, with key members of his own party, the Democrats, now questioning whether he's fit for office and will actually be able to win the election and govern in his current state. Biden is planning to visit two key sites of Pennsylvania, those being Philadelphia and Harrisburg. The importance of this trip cannot be understated, since he will need to win over both cities should he look to retain the control of the White House in November. His highly viewed primetime interview on Friday did very little to calm the nerves of those worrying that Joe Biden may not be fit to govern. This was the expected result, according to many key Democratic lawmakers. Biden initially won Pennsylvania back in 2020, but now Trump leads with 4.5 percentage points according to recent polls. So definitely keep your eyes on this topic. Of course, we'll be returning to it over the week, as I'm sure this story does develop, and we definitely have to keep our eyes out to see whether anything does kind of we see Joe Biden drop out, or Joe Biden stays. Both of those obviously have a massive impact on the market, since Donald Trump is currently the favorite, and having someone else kind of come into power instead of Joe Biden could of course sway the polls and therefore affect the market. So definitely keep your eyes on this topic. Very important one to note. Next to talk about, though, is of course the articles, as we are done with the charts, as we are done with the articles. Now, to begin with, like always, we are on the US 30, the Dow Jones, talking about US indices as a whole. And of course, this is kind of linking back to what we were talking about in the first article when we were talking about the S&P 500, the Dow Jones, that kind of thing. And that's why this is kind of a very relevant, asset to kind of be talking about today. Now, to begin with, though, we are talking about the US 30, not the S&P 500, but I'm noting the S&P 500 to come back to, if I can speak today. Now, ultimately, what we are seeing on the US 30 is really not much of change from really the past few weeks. Since the end of June, we've really just seen the market stall out within for the US 30. We've just seen price move to the side. We haven't really seen a move to the upside nor downside, and therefore we've just seen price trade to the side, and so there's really still not much to say for the US 30, just simply because even though we're receiving some very important pieces of economic data like last week, we're really not seeing much action. This week we are receiving the US inflation rate figure, though, so possibly that's going to kind of affect the market in some way. Possibly that could be the kind of key piece of news which does finally cause the US 30 to break this trend, this period where its price is just moving to the side. It'll be very interesting to see whether that is the case. We are receiving the US producer price inflation figure plus Jerome Powell's testimony and even Jerome Powell's speech. So a lot of very important US news this week. So, possibly that's weighing into the US 30. And once again, like we said at the start, earnings season. So possibly that's also pushing, sorry about the gaming notifications there. But ultimately, yeah, we've still got prices possibly moving to the side as a result of that kind of expectation and news to do with earnings season. So that's all the kind of important things to kind of keep on your mind and understand why we're kind of maybe seeing this price action. But ultimately, yeah, not too much to note with regards to where price could go, because nothing's really changed from the last time we've spoken about it last week, as that kind of higher target still remains around those previous highs made around the 24th of June. And those lower levels, of course, around, the kind of 50% Fibonacci retracement level, and those levels that were kind of touched around the 26th of June. So, not much has happened basically since the 25th of June. Next to talk about, though, is is actually S&P 500, of course, as this is the kind of direct difference that we're seeing, this complete divergence between the S&P 500 and the Dow Jones, as whilst we're seeing stagnation on the Dow Jones, which kind of represents the more traditional manufacturing industrial parts of the US economy, what we're seeing on the S&P 500 couldn't be more different, where we're seeing this continued rally, this continued push to the upside, despite the Fed's maybe a more hawkish monetary policy outlook in comparison to other central banks, and so we're just seeing price push further and further to the upside. But as you can see here, price is at all-time highs at the moment, and so we do have to question how long can this continue for, especially as we're heading into earnings season. Is it time, or are we about to experience somewhat of a retracement like we've seen time and time again, which has plagued the S&P 500's existence, like it does for all US indices. But still, we remain on this very bullish track, so definitely keep your eyes on the S&P 500. It's very interesting to see how things are playing out. Next to talk about, though, is the dollar, which has broken further to the downside, it does seem like, to end off the week, as when we were covering the dollar since the start of last week, we were talking about how price was starting to break to the downside, or at least was kind of retracing somewhat and was preparing to maybe move to the downside. And then over the course of basically Tuesday, Wednesday and Thursday, we just saw price continue this rapid movement to the downside, this continued sell-off. Obviously price had some short retracements amidst that, but still price broke through those kind of key liquidity zones, broke below the Fibonacci extension levels that we had kind of noted as well, and ultimately now has kind of continued that to end off the week on Friday, with price now breaking below this key liquidity zone that we of course noted previously as a key area of resistance. Of course, it wasn't as clean of a level as we've previously noted, but ultimately it was a key level nonetheless, and ultimately price has broken below it somewhat. So it will be interesting to see how price does continue to move. Now it's around this level, which of course we've noted is significant. So definitely keep your eyes on the dollar. We've got to move fast now, though, because we're kind of taking up too much time on US assets. But ultimately it is the kind of dollar, it is the US indices that are going to be most affected by this week regarding earnings, and then also of course the economic data that is being released. So definitely keep your eyes on anything dollar related. And carrying on from that is of course Euro USD, which did receive or did experience somewhat of a retracement to end off the week, but now to start off the week we are starting to see price maybe move back to those previous highs, and it will be very interesting to see whether price can break above this key liquidity zone to start off the week, or even throughout the entire week, whether price will break above that level, or in fact will we see price sell off and move back down to those previous range levels, ranging area, period of consolidation you could call it, and then possibly even lower than that around those Fibonacci extension levels and key liquidity zones. So definitely keep your eyes on Euro USD. Next to talk about, though, is pound yen, which has somewhat now formed this double top after, of course, tapping that 3820 Fibonacci retracement level and then moving to the upside. But instead of continuing this continuous rally that we've seen take place for the pound yen over the course of last week, instead we ended off the week by forming this double top with price selling off somewhat. So it will be interesting to see whether price now will move to the downside or maybe form some sort of range and period of consolidation, or in fact is this kind of fake out and now we're going to continue this swing to the upside like we've seen over the past few weeks or even months. Next to talk about though is Bitcoin, which has just kind of continued this sell-off that we've seen all the way since the 7th of June, so a full month now. And prices just continued this sell-off, it does seem like. Over the weekend though, we kind of retraced back on those significant moves to the downside that we saw ending off the week. So we did find some bullish liquidity around the kind of 54 level, $54,000 a Bitcoin level. But ultimately price retraced and then reacted to this key liquidity zone where prices previously utilized that area as a key area for price to use as bullish liquidity, and now it's being used as a new level once again as an area of kind of resistance, sellers liquidity. So definitely keep your eyes on Bitcoin. It's going to be interesting to see how things do play out, and of course any news to do with the Fed or inflation does affect Bitcoin, as it is somewhat of a hedge against the dollar. So definitely keep your eyes on Bitcoin. Continuing as a hedge against the dollar, of course, we have gold, which has swung massively to the upside to end off the week, with price breaking out of this kind of period of consolidation that we saw form, and then ultimately breaking above this key liquidity zone, which we did note as a possibility alongside the amount of economic data that of course we were receiving last week, which has likely influenced this massive move to the upside. So definitely keep your eyes on gold. It'll be interesting to see what levels price does stop off at, as we are nearing this key liquidity zone around the 2,400 level. Last to talk about though is oil, which of course has been swinging to the upside recently as a result of Middle East tensions, but seemingly at the $88 a barrel level, price has sold off, and so we are now forming this kind of period of consolidation. Definitely keep your eyes on oil. That's all to talk about on the charts though. Last to talk about is the economic calendar, where we are receiving some very important economic data, so we'll get through this quickly. Firstly, we're receiving the Jerome Powell testimony, followed by the Chinese inflation rate figure, as well as the Jerome Powell speech. Followed by that, we're receiving the German inflation rate figure, as well as the British GDP figure and US inflation rate figure, followed by the US producer price inflation figure and US consumer sentiment figures. So some very important figures to know, and definitely listen out for all of that economic data. But we've got lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading week. Hope trading day. Have a great one. See you later. Bye.